Let's bring in a pair of analysts. Wedbush Securities, Dan Ives has a buy rating on the stock. Ali Mogharabi from Morningstar has an equivalent to a hold rating. Good to have you both, Dan. What were the big takeaways? Did it not live up to great expectations here as the stock has rallied into the print?
Yeah, that's just knee-jerk. I'd expect 24, 48 hours from now. This is a stock that continues to be on the path into the mid-70s, potentially 8 hours. I think this is a major step in the right direction in terms of what we're seeing on the trajectory to our profitability, a rebound in rides, and, of course, eats. That continues to be worth, in our opinion, 15 to 28 hours a share. This continues to be the poster child for a recovery play. And I think you're going to continue to see a re-rating as investors look for the other side of the dark valley on Uber.
Ali, you don't necessarily agree. I think you have a $61 target, which is where the stock basically is right now. What stood out to you?
Yeah, actually, overall, I think on a net basis, it was pretty positive. What we look for is path towards profitability on the delivery side. And it looks like the EBITDA margin on the delivery side really improved well. And you can say the same thing about mobile. So 20% EBITDA margin, I think, was pretty impressive. When it comes in terms of the top line, there's so much uncertainty surrounding that. So whether it's that second wave of coronavirus cases that we saw come through in Q4 and maybe some other issues, those things certainly impacted demand for rides. But I think overall it's pretty positive. But what I would say is, though, there is still a question as to whether or not the strong demand for online food delivery is going to last even after of course, the economic recovery and or post the pandemic. So we do look for some, deceleration in top line growth on the delivery side. But overall, yeah, I think they performed pretty well.
Dan, do you prefer Uber or Lyft?
I mean, Uber here, just because you get also that eats piece. I think that's something they're building into a significant moat, combine some of the parts. This is a stock also global leverage, and everything Darren and the team's done back against the wall over the last 9 months. I mean, they've sort of come out swinging, and I think this is a stock that can get re-rated significantly higher, still like Lyft. But Uber, that continues to be, I think, the poster child for a recovery reopening play. And I think feel even more bullish after seeing these initial numbers.
Shepard Smith here. Thanks for watching CNBC on YouTube.